welcome everyone. Just want to check that if you're watching me on TradingView, can you hear me okay? Does the sound come through all right? Hello? Good afternoon. Hello. Okay, I think the sound works now. Okay, so again, thank you all for attending the session. What I'm planning to do for this session is really trade planning the FOMC interest rate decision. That event is due to happen in just about 3 hours time. It is 11:46 p.m. GMT +8. The news is going to be released at 3 a.m. on Thursday morning GMT +8. So what I'm looking to do, I've done some write-ups previously, but I'm looking to do the write-ups while I'm doing a live stream. Just giving you the different scenarios of how to potentially trade this news event when it happens or as it happens. All right, but as usual, quick disclaimer: any information or trade ideas or trade setups shared in this stream should not be construed as advice and is presented as educational material only. So, I will go through the majors: the euro dollar, the Aussie dollar, Kiwi, pound, yen, CAD, Swiss franc as well. If you do jump into any trades, please make sure you check your own do your own due diligence. Check that the setup fits with your trading strategy. You're not over trading. You're not over leveraging. You're not taking too much risk as well. Okay, so with that said, let's look into the charts. Well, let's look into the news first. How do I do this? Okay, so here we have it. We have the Forex Factory site with the news event. Just showing you here at 3 a.m. we do have the news of the US FOMC Fed funds rates to be released. You can see here that it's currently at 4%. They're expecting it to increase interest rates to 4.5%. So a 50 basis point rate hike expected here for the US at this time. I was just talking to a colleague earlier today when I was in the office trading, and I was just thinking, it looks like I had a sneaky feeling that what if the Fed Reserve raised rates by 75 basis points instead, and then actually, so the last aggressive rate hike before a quick slowdown or massive slowdown. With that on my mind, I don't. There's a possibility, but I don't think it's a high possibility. So I think let's just plan it based on a 50 basis points rate hike to a 4.5%. Okay, at this point with this news, given that the interest rate hike is pretty much expected, pretty much priced in, the focus should go towards the FOMC statement over here, and also the press conference. More importantly, the press conference. What we're looking for in this case now is whether the statement, I'll just show you the previous statement. Where is it? There we go. Let me see if it says anything there. So what we're looking for in a statement is any comments about the terminal rates, the final rates, and how high do they think that interest rates could get to. Okay, so this was the statement from November, you can see that they increased rates by 75 basis points, right? And they will anticipate that ongoing increases in the target range will be appropriate to attain a stance of monetary policy that's sufficiently restrictive to return inflation to 2%. And we pretty much expect a similar um, statement, but I think that this time we're paying a bit more attention to that line, right? You're paying attention to that line, whether the committee is going to comment to say that maybe ongoing increases could be scaled down, right? And then we'll be looking at the press conference for comments about terminal rates, right? The the main thing here to focus on is, they can see here, terminal rate. That's going to be the biggest driver towards price volatility for this event. Okay, and if we look at that one, terminal rate, increase the terminal rate to 5.25%. Okay, so it was previously 4.25. Oh no, it was previously at 5%. I think it was at 4.25 as a terminal rate before. Right now, they're looking at taking it to 5 and possibly even 5.25%. So higher rates, it could be higher rates for a longer period of time, right? Not as quick an increase, but higher rates for a longer period of time. So that's my focus for this news event coming up at 3 a.m. Interest rate decision, 50 basis points, most likely going to happen already, most likely priced in. Pay attention to the rate statement on comments about the scale of future rate increases. And then during the press conference, pay attention to comments about the terminal rates. Okay. So with all that said, let's look at the dollar index. Again, if you do have any questions, is it streaming for you guys? I have a question. I have a comment here that is might not be streaming. I think it's still streaming for you guys. Right. So if you do have any questions at any point in time, please put it into the chat. Let me know. If you are joining me at any point, drop a message, say hi. Quite happy, and let me know where you're joining me from. Quite happy to see where my audience are. All right. So AOBD2310, probably do a quick refresh. I'll still be here, so do a quick refresh. You catch up on everything. All right, fantastic. Okay. Okay, so here's the dollar index on the H1 time frame. Okay, dollar index on the H1 time frame. Right now, trading at this 103.78 or 70. What I'll show you here, I know I'm switching between screens quite a bit, but just bear with me. Quite a number of things to think about when planning a trade is, if you look at what happened here on the 3rd of November, where they increased rates by 75 basis points. Okay, so coming back to the dollar index, scrolling right across to the 3rd of November, that's what we're looking at this point here. Okay, so I'll just highlight that for you guys. That was the news event. Basically, at 2 a.m., this was before daylight saving or after daylight saving, 75 basis point rate hike. We saw that the dollar index weakened very significantly. It dropped from 111.40 all the way down to 110.40, pretty much 110.40. And within the next hour retraced back up, or within the hour retraced, and then after that spurred all the way up. Because what happened here was we saw a big rate hike that was pretty much priced in, but then we had comments from Chair Powell where they were talking about, they didn't confirm a scale down of future rate increases, and that's why we saw the dollar push towards the upside. Okay, so that's possibly what could happen again this time around, right? I'm not ruling this out, or if rather, I'm possibly anticipating this scenario. That's why I'm super careful about my trades coming up. So we could be looking at a big spike down and then, a double quick retrace and a full recovery towards upside. Scrolling back to the current, right now at 103.71. Okay, if we do see, and I was just going through these levels yesterday or last night during the stream. So we have this level at 103.45 from way back, okay, from I think June, right? From back in June, where we saw it react off this level. And then at 102.78, we saw it reacting as a level back in June as well. Okay, so just to give you a bit of points of reference for these two levels. What I'm anticipating now is that with this big move yesterday, CPI data, right? US CPI was 7.1%. It's slowed down more than expected. We saw that drop. So this was because of CPI. Okay, so that's CPI data. 1%. Less obstructive. And you can see that move back, that move downwards. So what I'm anticipating here is that we could see the dollar index possibly come down. I think this is a huge move. I randomly draw lines towards the downside. It's big, but it's possible. Okay. So I think we could see, because it's so near this 103.45 level, I think that it could break that quite easily. I think we could see it come down, test 102.78 before bouncing back up again. Okay, so same thing, rate increase, pushing price down. So my earlier intention was to write it up and publish as I'm going through this session with you, but I think that's going to take too long. So, all right. So I'm looking at this to push down with the rate increase, priced in scenario, and then comments from the Feds about possibly terminal rates, talking about slowing down the scale of future rate increases might bring some stability back, and then we could see the dollar push back up towards that 104 region. But if you're trading in a short to medium term, let's pay attention to that first move. Let's pay attention to that first move, that possible dollar weakness to be applied. Okay, so that from here on, I'll be looking at where price could, for the other majors, where it could move to on the first move with dollar weakness, and then possibly dollar strength. I'll give you how I plan my trades. I'll just scribble it here. How I plan my trades, I tend to have 3 columns. So one is a good news scenario, which means dollar strength. Right? And then you have another one where you have a bad news scenario, which is dollar weakness. And then after that, obviously another one, which is the do. Okay, so that's how I usually plan my trades in the lead up to a big news event. I'll start identifying which pairs I will be trading in a good news scenario, which pairs I'll be trading in a bad news scenario, and which pairs I'm just not going to pay attention to at all. All right. So with that said, I'll bring up another one just so that I don't mess up this here. Let's look at the Aussie dollar. All right, I'll take this away for now just because it messes stuff. Check. There, you guys do see it. All right, Aussie dollar right now trading at this 0.68 64, 65 level. Okay, overnight we saw it shoot up to test this recent high of 6892. I would say that is very close to that 69 level. All right, and you can see that as we zoom out, very high level at this point. If we do see that dollar weakness come into play, then we could very well see the Aussie dollar push towards the upside. All right, so like we were looking at here, if we're looking for that dollar weakness to come into play, then we could see the Aussie dollar push towards the upside. So I would say do that, and um, you could be super risk adverse. All right, zoom it in a little bit. You could be super risk adverse and wait for it to break above 6.9. With 3 more hours to go, I don't think price is going to form a new high at this point. So what you could do is, if you're looking for that move, dollar weakness, this is something that you could be planning. Following trend, you could be looking for a buying opportunity above 6.9. Take profit towards the next key level. It's about 70 pips. Stop loss about 30 pips. You're looking at a 1:2.5 risk reward ratio towards the upside there for the Aussie dollar. Okay, so let's move it to the right timing. We could see that move. This is based on if we see Aussie dollar pushing higher, if we see the dollar index weakening, and then the Aussie dollar pushing higher. Would you sell it towards the downside? I wouldn't, so you don't plan too many things. At this point, I'll be looking for a trend following trade towards the upside. Okay. Then looking at the Kiwi dollar, I actually like the Kiwi dollar a lot. I'll tell you, this will be a setup for the more adventurous of us. The ones who are more adventurous. Hey, if you're adventurous, put it into the chat. Let me know. I want to know who is the adventurous audience, right? Why so is because the Kiwi dollar, you can see that overnight, well, last night it shot up. It went to that 6510 level, right? It went to about 6510 or 13. Okay, good interim resistance level there. And then it retraced, and for the whole day today, the Kiwi dollar has been in that range. Everything else has broken towards the upside or had some volatility and movements. The Kiwi dollar pretty much sat in a consolidation in about a 27 pip range. A 27 pip range on the Kiwi dollar. So that's one big, I wouldn't say it's an alarm bell, but that's one big factor that I'm watching closely, because this could be quite straightforward, right? So I'll show you here on the dollar index again, right? In the good news scenario, that means we're seeing dollar weakness, or let's call it the DXY week. We call this the DXY strength. Then not sure. Okay, so in the DXY weak scenario, I would say that you could be looking at buying AUD USD. Okay. Then looking at the Kiwi dollar here, this is almost the perfect setup for a straddle, right? What do I mean by a straddle? I've done a short course on that before, so if you're interested to find out more about a straddle, proper straddle strategy, let me know. You could be looking at a long position, so you can have an order. You can place an order relatively safe, put a bit of a distance to it at about 6470. All right, take profit 40 pips. stop loss, you don't have to go all the way down there. You could have about a 20 pip stop loss of 1:2 risk reward ratio towards upside. Then on the flip side, if it does break down, I would say below this point, I would say even there, right? Why I want this level is because it coincides with those, it coincides with these points here. Okay, so I'll say there, and then you'd have, stop loss again about 20 pips, take profit. I would say down to this point about 40 pips, again a 1:2 risk reward ratio, right? So I'm looking at this. This could be something that you set up a buy limit, a buy or a buy stop, a sell stop. See where its price, if price continues to fluctuate within this range. Once it breaks out, remember you have to cancel off the other order, and then look for it to push that 40 pips towards upside. Or if it breaks down, look for it to trigger and then push that 40 pips towards the downside. Remember to cancel the other trade that was, or the other order that was not activated. So, both buy side, sell side opportunity on the Kiwi dollar. This is the only one for today which has been sitting in that tight consolidation, right? So we could be looking at this point. If dollar weakness, we will buy NCD USD. Then if dollar strength, we could also be looking to sell or selling NCD USD. All right, so that's what we have so far with that done. Okay, the pound dollar, you can see, look, everything else has formed a new level. The pound dollar climbed back up. Pound has been quite interesting because just this afternoon, again back to the news, just this afternoon we had the UK CPI data year on year was 11.1, expected 10.9, came out at 10.7. This was at 3 p.m. and you can see at 3 p.m. GMT plus 8, it just had a small fluctuation, didn't do too much at all. I actually had my buy order at that point. I was expecting a big pop up. I was planning a sell order just below that support level for that pop down. Nothing happened. I canceled off the orders and then I'm still waiting. Okay, so it pushed back up towards that 1.24 level. I think that as a trend following trader, right? I follow the trend. I like following trends. The way it's going, it seems to have formed a bit of a top, right? I'm pretty sure it could break towards the upside, but it's failed to break once. It seems to be holding at this 1.24 level. Nice round resistance. Could it turn back down? Possibly. Or rather, could it break up with a dollar weakness? Very likely. But, I think that if we looked at it on the daily time frame, you'd see that the next resistance level is at 1.26. I think that there's a lot of other better trades that you could be looking into rather than trying to take the pound dollar on, uh, unless you wanted to be super risk adverse. Wait for it to break 1.2450 before looking to buy. But you'd see that is about a 50 something pip move towards the upside before looking to buy. I think that if we're anticipating that move, a quick weakness and then bounce back up, then I wouldn't be too keen on the pound dollar. Pound dollar will be that scenario if instead of scenario one happening, we have the flip side, right? We have the flip side where price climbs up, breaks above a resistance, and possibly go all the way back up. So I'll change this as a different color. Right? This is scenario one, what we expect. Scenario two, completely different. What if all the analysis I've done is wrong and we see the dollar index shoot up towards the upside, then you could be looking at a pound to sell down. All right. only if it breaks below this 1.2330 support level. Very key support level here. You can see I'll only be looking to sell it down. I'll only be looking to sell it down if it breaks that support level towards, I wouldn't say it'll come down to there as a support as much as it is. I would say that the next support level would be at about 1.2225 or 1.2224. Okay, so you could be looking at the pound dollar in the scenario where we see just dollar strength straight away. No surprises, no fluctuation, dollar rocketing towards upside. Then I'll be looking to sell down on the pound dollar right below that 1.2330 level, about a 30 pip stop loss, about a 80 pip take profit towards the downside, 1:2.5. But bear in mind, this is massively, where should I put it? Counter trend. Okay, this is massively counter trend. So it could work, but it's high risk. We have seen the pound dollar climb very strongly towards the upside already, looking for that big retracement down. Would depend on the dollar index really rocketing towards the upside very strongly. Okay, so I would say that that's by selling USD. Right. Okay. So with that done, then it comes to my favorite one, the euro dollar. Right, look at the euro dollar. It's pretty much reclaimed yesterday's high. Right, yesterday's high was at this 1.0672, almost 72 level. Retrace all the way back down. Just earlier this evening, 6-7 p.m., reclaimed that high and retrace back down again. It looks like we're going to see possibly further upside on the euro dollar. I'm not sure. I'm pretty certain that it's not going to get to 1.077 or 1.08. Seems like a big move, but with the markets, anything is possible. So I'll be looking for the euro dollar to break towards upside if we see that dollar weakness come into play. So again, that was yesterday's near-term resistance level. Right now trading at 1.0645. I'll be looking at upside potential at about 1.0685 thereabouts. Take profit 80 pips. Stop loss about 30 to 40 pips. You could be looking at a 1:2 risk reward ratio towards the upside there on the euro dollar. All right, this is entirely trend following. What you notice, or what you should notice, is the pattern here that the euro dollar does break up strongly, retrace, consolidate a little bit, break up again, retrace, consolidate, and break up again. What we've just seen is that break up, consolidate, and then that break up again. Looking for it to consolidate and then possibly push back up if we see that dollar weakness come into play. All right, so all this, remember, these are all on that first move. We're not considering what could happen during the press conference because, it could be anything. Press conference, they could be saying anything. So this is buying euro USD. Okay, we see a weak dollar. We're going to do that. We could do either of that, and you can see these are all trend following scenarios. I would say that this is counter trend as well. Dollar strength, you can see a counter trend scenario on the Kiwi dollar or the pound dollar. So just be extra careful there. Then looking at the US yen, I can tell you that right until about 4 o'clock, there you go, right until about 4 o'clock, I was not considering the Kiwi dollar as that huge potential. I was considering the US yen as that huge potential because, again, quite similarly, we saw the yen trading within that range for pretty much the whole day, right? Pretty much the whole day, but it broke my plan, spoiled my anticipation as it broke down from 5 o'clock. It broke lower, 6 o'clock, came down, and then it's pretty much broken that pattern. So, right now the yen, US yen trading at 134.88 or 134.90. Um, very close to that key support level of 134. You can see the last time it came here, it bounced strongly. This was earlier this month. Okay, so I would say that this might be a scenario where you don't do anything on the yen. Okay, so how it looks like is on this part here, do nothing, USD JPY. All right, so why do I suggest not doing anything? If we do see that dollar weakness, we possibly will see price drop, right? Dollar weakness, we're going to see price drop to that key support level. Oops, I don't know what happened there. We're going to see price drop towards that key support level. What happened to my lines? Okay, but the last time it did that, it bounced very strongly up, right? And you can see that it's been a long time since we got to that level. The last time we got there was August, right? And it was a good, strong swing towards the upper side when it hit that same level as well. So, with all the other big moves potential on the other pairs that we've just identified, should you be trying to meddle with the US yen to trade it down that 80 something pips now, and possibly see that big reaction bouncing straight back up again? I think it's not worth that kind of headache and stress. We could be looking for the other pairs which we have just gone through, where you have trigger levels which are a distance away, so that you have that time to really see how price reacts before your trades get activated. Okay, so that's why I would say that for US yen, it's possibly a do nothing scenario. Fabio says it's a really good entry at NZD. NZD CAD is following Kiwi dollar in a straight line. Do you think I'll do the same? Okay, I'll look at the NZD CAD shortly. All right, Fabio, give me 2 minutes. Well, a couple minutes. Just wanted to ask if USD buys will NASDAQ 30, NASDAQ 100 buy to possibly well, see, the thing is there's going to be, it really comes down to the press conference, right? Especially for the index. When you start trading into index, I would say be extra careful. It's not possibly going to react too much with the first news. It's possibly going to do more during the press conference, because for the index or for equity markets, it's going to be highly driven by that comments of the terminal rates. Okay, so I don't think it'll be driven so much by the dollar yen. It's going to be driven by comments about the what was it? The terminal rates. All right, Duncan, hope I answered your question there. Fabio, I'll get to yours shortly after I've gone through the US yen, Swiss franc, right? Look at the Swiss franc. It's done similar to what the yen did, but on a larger or more volatile scale. I don't know how many people would remember, but I was actually talking about the Swiss franc at that 0.94 level. Now that it's broken that point, it's come down to towards this point here. You can see back in March where we saw it hit that 9.2, almost that 9.2 0 level. tested at 9.2 round number, and then bounced strongly back up. Okay, so again, US Swiss franc trading lower, coming down. I would say I would delay any trades. So it's not a don't trade the US Swiss franc. I would say I would delay the US Swiss franc trade because remember, not only do we have the FOMC tonight, tomorrow, we have Swiss National Bank with a 50 basis point rate hike, we have the Bank of England with 50 basis point rate hike, and we have the ECB with a 50 basis point rate hike as well. So a lot of rate hikes coming around. I would say wait it out. US Swiss franc could drop further. Okay, it could drop all the way down towards that 9.0 level. Is at 9.236. Could be a big 200 pip drop towards the downside. But with a couple of key levels in place and the interest rates decision coming up, you can see that the last time they did that. Oh, I missed out my. Okay, let me see. Okay, it's still there. Right, the last time they did that. Here we go. On the 22nd of September. Right, on the 22nd of September, when they did the rate, they actually saw rate hike. We actually saw, was it a rate hike? 22nd, yeah. And they did a surprise, pretty much not surprise, they did a planned rate hike. We saw the US Swiss franc on the 22nd actually push back up. A bit surprising rate hike, and we see that weakness, or rather not as surprising nowadays. So we could actually be seeing it come down either to test that 9.2 level or 9.0 or 9.1 level and then push back up again. So I'll say delay the US Swiss franc for um, possibly tomorrow's kind of trade, tomorrow news event trade. All right. So coming back to this with our plans there, I would say again, do nothing on the USD CHF. So, like answering the comments from Fabio, let's look at the NZD CAD. CAD. Okay. So, like we were planning, we are talking about the um, we were talking about the Kiwi dollar, right? Kiwi dollar had that very unique opportunity both buy and sell within that buy or sell, not and sell, or sell within that straddle. The Kiwi CAD, right? It has been in that kind of trade, right? Good, strong, well, relatively strong trending scenario, right? We've seen it respecting that channel, right? Bouncing off that support levels, bouncing off the bottom of the channels to push up, resisted by the top of the channels, turning back down. At this point, I would say that um, for this to push up, then obviously we need to see either the Kiwi dollar pushing towards the upside, which you would see with that straddle. We have that opportunity there. And I like it that it's been consolidating, could show that push towards the upside, or the CAD to weaken further, right? I think this will be a good trading opportunity. I will tell you that this is not a pair that I trade at all. I wouldn't say often at all. So, if you're looking for a buying opportunity, then, well, definitely look for buy opportunity because it's trending towards upside. I would say that the more aggressive could be looking to trade from the 8758 level towards upside. I think the safer bet will be to let it break above 8768 or 8770 before looking for a buying opportunity. right? Take profit would be about 60 pips towards the upside. Stop loss could be a 1:1 towards the downside, but given that it's already pushed up, broken above that near-term resistance or interim resistance level, I'd say that you could even be looking at a shorter kind of a 25 pip stop loss, 50 pip take profit, or 1 to 2 towards the upside. We've seen how price moves as it comes towards that middle line, right? The middle line provides a little bit of a support as well. So as price climbs up, we could see that push towards the upside, right? So as it comes close, breaks above that middle line, you could be looking for keeping your stop loss even tighter as well. All right, Fabio. So I hope I answered your question there um, on the USD NZD CAD. I will clear rock. I will get to gold. Hang on, hang on. I will get to gold. Okay. So we did Swiss franc, and then now let's look at CAD. Since we just looked at the NZD CAD, let's look at the CAD. Hey, and while I'm doing this, and all of you fantastic people joining me on TradingView, can you do me that huge favor? Click that boost button, that little rocket there. I'm just trying to see if it changes anything, changes the algorithms, helps with anything at all. Do me that huge favor. Click that boost button. Let's see if it changes anything at all. All right, big favor there. Thank you again. So USD CAD retrace. I mean that big downward move. We know why. It's because of that dollar weakness. Found a good strong support at this 1.3520 price area, right? So good strong support level there. And then it's found that swing low and high level as a very interim resistance level. Okay, so it's been trading within this range. Anticipation is for if we see that dollar weakness come back in, it's going to push price down. I wouldn't do anything on the CAD now unless it breaks below the nice round number of 1.35. It's close. Potential is there, but I wouldn't do anything unless it breaks below 1.35, and I'll show you why. Right? If I go to 1.35, you can see that only when it breaks below, strongly below, then we're going to see that big move, potentially big move towards the downside. So that's 1.35 there. Swing high, swing low, test there. I wouldn't do anything unless it breaks below that point. So this is one of that scenario where you don't have to rush into a trade. I do believe that if we see that dollar weakness come in, we're going to see that push, right? And surprisingly, or rather, not so surprisingly, CAD does not have that many news to be released this period compared to all the other pairs. So the volatility on the CAD is going to be highly driven by the dollar index. Right? It could be driven by oil as well, but at this point, no big news on oil, so it could be, or it's most likely going to be driven by the dollar index. Wait, sit there, wait for it. Don't do anything until it breaks below this whole area. Okay, oops, what did I do? All right, if it breaks below this whole area, then that's where you go. All right, look for a selling opportunity towards the downside. Stop loss 40, 30, 40 pips. Take profit, good 80, 90 pips towards the downside. A 1:2 risk reward ratio on the US CAD back down towards that 1.34 level, right? Price level. So in this case, we're looking at the dollar weakness, looking to selling USD. what now that I'm looking at this might be a bit concerning that we're so heavily dependent or expecting the dollar weakness to play out. Okay, just bear in mind that this is the first move, right? So we're looking for that first move towards the downside. You could be following on with that onto, if it does hit a support level and bounce back up, we could flip it straight away and then look at that dollar strength come back into play for some possible counter trend trades. All right, I'm not going to be recommending to you too many counter trend trades because I really think that that's a trading scenario that not many people should be adopting because it is high risk. Um, it's not so much about trading that opportunity. Sometimes, if you don't know what you're doing, you end up gambling based on the smallest move that looks like a reversal. All right, so that's it for the major currency pairs and the NZD/CAD. Let's look at gold. All right, so we had that question there. Oops. On by ClearRock about gold. So gold shot up, dollar weakness shot up all the way towards that 1824 level, retraced all the way back down because of that dollar consolidation, a little bit of a bounce. We see it sit back at that 1808 price area, top side of 1812. Again, this is that opportunity that this presents you the opportunity for a potential straddle. I think that although it gives you the opportunity for a straddle, right? So the last time I was running a class about trading straddles, suddenly everything, my students came to me for everything looked like a straddle. But there are times where you're looking for a straddle, and there are times where you see one and you don't activate it, right? So why so is because we've seen that big push. Could the US could gold drop lower? Quite possibly. You could see what happened here in December for the big push towards downside, but that's going to need massive dollar strength, right? The big dollar strength to push it down. So I'm still going to be looking for that dollar weakness to push gold up, right? To push gold up, breaking out of this area, the first target, you would have a very good, maybe a 1:2 risk reward ratio towards the upside, back towards the 1824 resistance level. All right. If you were adventurous and was actually no, you should do this a little bit higher. So be looking at 1815. Yeah, you should be looking at about 1815 because gold does tend to be a little bit more volatile. So you want to give it a bit more space to move before you trigger a trade. Then your stop loss could be a little bit nearer up again because once it triggers, we're going to see that big push towards 1824 level. You could be looking to sell it back down, but that's not possibly something that I'll be considering. I think that there are a lot of other opportunities rather than to try and meddle with that counter trend on gold. And then if it breaks above 1824, with a good strong move like what we saw last night, then we could see gold continue towards upside towards that 1838 or 1840 key resistance level that we saw was based on a whole area of whole price volatility area from June this year. Alrighty. Hope I answered your question there, ClearRock. I think still looking at that upside potential. If dollar does strengthen massively, then we could see it drop. But I think that we're likely to see. Let me just show you the example here on gold back on the 3rd of November. There we have it. Oh, there we go. Right. So remember, dollar weakened. So we saw this push up, and then the dollar strengthened back down again. Okay, so that was that move that we saw on the 3rd of November, pushing back down, but then overall climbing back up. So, for me, I'm only looking to buy gold. I don't like selling gold. If it does drop, I'll be looking for it to drop, hit that support level, then I'll be looking for a buying opportunity, say for example, like that, something like that again, right? So I'll be looking for the drop to a support, bounce, then I'll look to buy, or to break out of a consolidation, look to buy, or to break above a resistance, and then look to buy towards the upside. Alrighty, with that, hey Fabio, yeah, the channel was closed. Don't know what happened there. Um, I'm a bit disappointed. I'm a bit sad. All my videos were there. Wish I had the opportunity to download it before that happened. But I guess they should they should be able to get it back up. Fingers crossed. All right, but hey, if you have any questions, you can reach me here. You can drop me a message and reach me here. All right. Um, so I would say that in this case, we'll be looking at gold upside, buying gold, right? If we see that dollar weakness, we can look at that. All right. So, a lot of trading opportunities for all the major currency pairs. Just be extra careful. Don't jump into everything. Um, we have looked at the key levels, we have identified trigger levels, all very good risk to rewards. Some of the trades will happen faster than the others, right? Because we have nearer trigger levels or further away levels. Don't panic. If you are going to be trading this news event, or if you are looking to trade these news events, please don't feel like you have to rush into a trade, right? Please don't feel like you have to rush into a trade. A lot of times, I know retail traders who would try to trade and force a trade just because they have in Singapore stayed up to 3 a.m. just to trade the news event. Okay, so don't force a trade. We have our plan. We've just done the crystal balling, the planning for this event. Stick to the plan. Let's see what happens. In the worst case scenario, you wouldn't have entered the trade, but at least if you didn't enter a trade, you wouldn't be losing money. And hey, at 3 a.m., as the FOMC news happens, you could, if there's nothing much happening, you could also be watching football. France versus Morocco, who do you think is going to win? Let me know. That's the last one I'm going to leave you with. Put it into the chat. Let me know, who do you think is going to win these semi-finals? France or Morocco? Gonna stay at Euro dollar and Kiwi dollar. I think they're the best prices. Fabio, are you going to be looking to do the straddle on the Kiwi dollar? Or are you just going to be looking at a one-sided trade, a one-sided plan, or are you going to do that buy and sell order? YouTube was scared they were making a lot of money. Well, you see, without YouTube, at least we can do it on. We can still do a live stream here on TradingView. I am streaming onto YouTube as well, so those of you who are watching us on YouTube, you can always jump onto TradingView, drop me a message as well, follow me, do a boost, all that. Hey Imad, how you doing? Hey Suki. Suki says France will win. All right. Jamilu, we did gold as well already, so hope you caught that. We were just talking about that on TradingView, in the chat on TradingView. I'm not sure what happened to the YouTube channel for IC markets. I do believe that, let's just be patient. Should come back up. All right. But hey, you have my channel and I'm here, so you can watch this and join me. No worries. You're most welcome. DSK, France. I want to see France in Argentina. I do want to see France in Argentina, but it'd be interesting if we had Morocco actually win. That would be a major, major upset. But yes, France and Argentina will be the dream final that we'll all be watching. Okay, so anyone else? Anyone else have a question? Anything you'd like me to look at, consider, or banter on further? If not, hey, remember, do me a huge favor. Click that rocket boost button, right? Click that boost button, and I want to see what happens. Does this stream gets boosted all the way up, or what happens, right? So help me out. Let's do that. And hey, if you even shared it out, it'd be even more fantastic. Those of you attending, I'll call an end to the session. If you had a good session, you found it useful, you found the information good and possibly effective to planning, please put it into the chat. Let me know. I look forward to your feedback. I do this at 12 a.m. in the morning. Give me that feedback. That's all I ask for. And my channels for signals, I don't have a signal channel. I don't have a signal channel. I do a lot of trades. I do a lot of analysis, and I share a lot. So just join me on the stream. I might do a signal channel soon, so stay tuned for that. I have a lot of people asking for that, but I haven't done it. But we'll see. Thank you, AOBD. Thank you, Elad. I really appreciate that. Thank you so much. You're a champ. Right. Thanks, Fabio. I think I had this one. I'm not sure now. Did I? How do I find? Let me see. Oh, that's gonna be a mess. Straddle? No, I can't find it. I think I did a straddle of the Bollinger Bands actually. If you looked at that one, you could actually be seeing the Bollinger Bands part. Was it part 1 or 3? No. Part 1. That does give you a little bit of an idea about the straddle strategy as well. Right, you get an idea of a straddle strategy there as well. I'll put that link into the chat here. Hey, Secrets Video, Salamo. Thank you. Alrighty, so with that, I have bantered on for an hour. It is time to fire up the MT4, get ready, gonna hammer, possibly look at entering some trades. I hope the markets play out well, and all the best to everyone who is trading. Trade well, trade safe, and if you are watching the football as well, please let's enjoy the match. France or Morocco, whoever it might be, I'm sure it'll be a fantastic match. With that said, take care now, and I'll catch you again possibly very soon. See you now. Bye bye.